Hi, everybody, and welcome to the TGIF Business Networking Hangout. I'm your host, Melanie MacDonald. I'm a brand identity and outreach strategy consultant, and with me today is special guest Stephanie Sins of FinanceAbility.com, and she's going to be discussing with us what small business owners and solopreneurs need to know when they think about financing their business. It's going to be a great show and a great topic and a great guest. Stephanie, please go ahead and introduce yourself and tell us in your own words a little bit about what you do and what your business is.
Okay, well, first off, thanks so much for having me, Melanie. It's a pleasure to be here, and it's been a pleasure getting to know you over the last, I guess it's been what, like 6 weeks maybe, since we bumped into each other, and so it's been really great to be part of this, and I appreciate somebody who's willing to take on the F word, because I know a lot of small business owners, as soon as they hear finance, they're like, oh, they start to hyperventilate, or they want to bury their heads in the sand. So I know it's something that a lot of people are nervous about, but I do think it's an important topic, because the truth is you're in business to make money, right? And so if you can't run your business and ignore the finance part, and so what I really look at my job as being is helping business owners get comfortable with finance so that they're not afraid of it anymore, and then learning what their particular financial style is so that then they can make the decisions that are best for them. A quick summary: finance is like Baskin-Robbins 31 flavors. There's pretty much something for everybody, but you got to know what you want, because if you walk in and you order rum raisin, but you don't like raisins and you don't like rum, you're probably going to be pretty unhappy.
That's a great summary. I love it. You know, something that you said hit me, and that's everybody's afraid of the F word. And I think you're right, because when people are starting out going into business, they're usually doing it because they have some skill that's a passion and that they want to turn into a business. And whether they're just starting from scratch or their prior experience was working for a company as an employee. When we work for companies, there are a lot of positions where we don't have to worry about the budget. Some other department does that. They just say, you have this much money to spend on the supplies you need and what you want to do, so go ahead and do your thing. But we're never actually the ones who have to come up with that budget. So then going out into our own business and starting it, it's like, where do I even begin? How do I even figure out what that budget word is, the B word? So what are the first things that you would recommend to someone going into business that they start thinking about from the beginning before they even start?
Well, I think one of the things that you really have to be clear about when you start your business is why. Why did you start your business? Because if you're not clear on what it is you want to get out of your business, then maybe what you have is a hobby. Might be an expensive hobby, but you may just have a hobby. And the reason I say that is because if your principal motivation, for example, in starting a business is that you want more control over your time, or that you don't want somebody telling you what to do, which are great reasons, don't get me wrong, to start a business, that's not necessarily going to bring you money, right? That's not going to generate sales. That's not going to help you build a business. So, like you said, what you need to do is focus on what you're good at, focus on your passion, and then really get a handle on how can I translate that passion into something that other people need and are willing to pay for. So to me, that's the first step. Is I really love talking about finance. I know it's weird, but I do. And so what I had to do when I started Financiability was understand, okay, I love talking about finance, but how is it going to help other people? And are they willing to pay for that help? So I can see if I really have a business or, like I said, a hobby.
That's great that you say that, because that's actually marketing 101 as well. When you're out there promoting your goods and services, so many of us have a habit of talking about what we think is so great about it because we love it so much. And instead, you have to get in the mind of the clients and think about, well, what are the benefits to them, and speak to those points. But going back to what you were talking about, what would your advice be for in a down economy like we had over the past 10 years? A lot of people found themselves laid off from their jobs. And they may have gone into business not necessarily because they wanted to, but because they lost their job, they couldn't find another one, they had to do something. So it's still pretty much the same principle. Are there different considerations for people in that situation than there are for people who are like, I just really want to start my own business?
Right. Well, I think one of the considerations is you have to look at your personal financial situation as well, right? Because you've got your dreams, you've got your aspirations, or you've got the reality, you've lost your job, and so you need to do something else. But then you've also got what you need to make your family work. You know, for example, I have small kids, and so one of the things that's very important for me is making sure that my kids have enough money to go to college. So while I'm looking at how much money I can invest in my business or how long I can take a chance on getting my business to work, I know that I need to have a certain sum set aside so that my kids can still go to college. Right? So my personal resources, I need to look at what my personal resources are to contribute to the business, and I need to put a value on my time. Because if I'm spending time in my business and I am actively out there pounding the pavement trying to get clients, those are also hours that I'm not looking for a salary job, right? So I'm trading those hours, and I need to make sure that I invest before I say to myself, okay, our savings are really too low now, and I need maybe to take a break from the business idea and get a job for 6 months so that I can build our savings back up and try again. And I know it sounds harsh because a lot of people are like, no, but I don't want to go back to being a salaried employee. But sometimes that's the right.
Oh, and Stephanie is frozen for me. Sorry, Stephanie, I totally missed the last portion of what you said there. Would you mind repeating it just in case it wasn't just me? Like the last
Yeah,
two.
no worries. Yeah, well, the idea that if you're out there trying to start your business, but you're under so much stress because of your personal financial situation that every time you try to close a deal, you're kind of like, oh, please, please, please buy. Oh, please, please, please buy. I need to feed my kids. You're not going to be successful, right? And so while it may be disappointing to say to yourself, I'm going to go work somewhere for a year and save money, you need to see that more as a stepping stone that's going to actually let you start your business in a position of strength, as opposed to starting your business with your hat in your hand and saying, oh my gosh, this has to work because I can't make it through next month.
Thank you for that, and thank you for repeating it.
Yeah,
so those are the things that people going into business have to think about. What about the process of starting up? Are there any common hidden costs that you often find that your clients are surprised when they get hit with them, or they just didn't think about that, but that are things that are really common? What would some of those things be? And before Stephanie answers that, I'm going to let the audience know, if there's anybody watching out there, that if you'd like to come in and join us inside the Hangout and you have some questions you'd like to ask Stephanie, please just leave a comment in the event listing. I'm happy to invite anybody in. This is a networking Hangout. Okay, back to Stephanie.
Okay, so one of the things I see, it's not just the cost that deters people, but one of the things I see is a lot of people start out on their own and they say, well, I don't need to create a legal entity. You know, I don't need to create a company. It's just me. I'm just going to work and I'm going to do my thing and it's going to be fine. And they run their business basically out of their personal checking account. And, you know, even people who have become relatively successful, I see some of them still doing it. And it's not, it's for lack of knowledge, I think. You know, it's not because they didn't want to do it, it's just they didn't understand why it was important. So again, in the perspective of making sure that you do everything that you can to protect your family or yourself, you know, your savings, it's very important to separate your business life from your personal life, and that means you need a legal entity. So whether it's a LLC or an S corp, you know, we're not going to go into that today, but you basically need an entity that contains all your business stuff, okay? Because what it does is it says if anything goes wrong with your business, at least all of your personal assets, your house, your car, all your savings accounts, aren't at risk. Okay, so that's part of managing the risk. And then the second thing that you really need to do is you actually need to bite the bullet and have a separate banking account for your business for a couple of reasons. One, because I think it makes clients feel a lot more comfortable to send money to a business account than to send it to your personal account. Gives you some credibility there. But then two, it's really the best way to track how much money you're spending on your business. Because we all know nobody wants to sit down with your bank statement at the end of the month and say, that was business, that was personal, that was business, that was personal, and add it all up. So having that business separate, physically separate, having the money separate, is going to help you understand how much you're really spending on your business. Because we all have an idea, but quite often that's not the reality. So we kind of need to see the stark reality in numbers through the business banking account.
And when you mention business banking account, would some of the alternatives to getting a second bank account be viable alternatives? For example, say setting up a PayPal business account that's not even in your bank, but it's completely separate. Would that be something that could be also used as a separation?
Sure. What you really want to do is you want to keep the expenses and the sales in the same place. That's the whole point of having a separate account. So that what you can see is how much cash comes in just for your business and how much cash goes out just for your business. Now, the logic is you want to run everything through there. And so the only potential pitfall I see with PayPal is you may not be able to pay all your bills through PayPal. And so then what happens is you end up paying part of it with your personal. You've kind of mixed things again. Okay. But to the extent that you're online, if you're working strictly with online vendors, that would work great. PayPal would be a great solution.
Now, what about for people who have home offices because they deduct a portion of like their electricity bills, a portion of their mortgage, that sort of thing, but those things are generally not something that you're going to put on your business account. You're going to put it on your regular bank account.
Right. Well, what you can do to make it really simple, and this is what I do personally, is I calculate the value of my home office, and I actually have my business pay rent for my home office.
Oh, okay.
And so then I'm not going through these crazy calculations every year trying to figure out how much I actually spent. Now, my accountant, I'm sure my accountant does something with that. I don't know. But, basically all I have to worry about is, okay, this is the value of my rent so that I move that money from my business account to my personal account.
Okay, so basically you set it up so that you're paying yourself rent for office space and your tax accountant knows what to do with that.
Right. Okay. And what happens in that case then is it's easy for you too, because when you do your calculation and you say how much do I need to make this month, you already know the number. I have $500 in rent, and that's covered your fixed cost, or $500 plus $100 for the phone plus $50 for utilities. You know what that sum is, so it helps your calculations as well to really know up front how much it costs you.
I've never heard anybody say that before. That's really a great piece of information right there. I'm going to send it to my tax person.
Right.
So how did you go about figuring out what your rent would be? Did you go by the IRS guidelines where they say, measure the square footage of your room that you're using for your office?
Right. Well, yeah, there's really two different ways, and I'm not a tax specialist, so you definitely need to get a tax accountant to talk to you about what this means for your deductions. Okay.
Right.
And we have an S corp. Okay, so I know the tax treatment of S corps is a little different than maybe an LLC, or should be relatively similar. But a C corp, for example, would have different tax treatment. But anyway, my tax treatment is such that we looked at what square footage was occupied, we looked at how often we used it, which is every day, and then we also looked at how much it would cost us to rent space elsewhere, right? Because ultimately, if my business takes off, which fingers crossed it's going to happen, I'll have to go rent space somewhere else. I can't stay in my home office once I have a team. That's not That's not going to make any sense. And so that was another element that we used to figure out what the right amount was, because what you also have an obligation to do when you're presenting your financials is to present an accurate representation of what it costs to run your business, right?
Right.
And so if I didn't have a home office and I had to go rent office space, what would it cost me? You know, that's an important element. Now, you know, because it's in my home, there are some advantages, so the number's not quite what it would be if I was actually paying somebody to rent. But still, you know, that's an important consideration.
How might a small business owner recognize when is a good time to make that transition from a home office to a rented office space somewhere else? And do you find that a lot of your clients who come to you have already started thinking about, oh, I do want to grow, I do want to take on staff, I do want to get larger? Or do you find a lot of your home business workers really just like working from home and don't necessarily want to get bigger?
Well, and I think it's interesting you mentioned that, because it's a mix, right? And to me, this gets back to something we mentioned at the beginning. What is it you want your business to be, right?
Mm-hmm.
So I think there are some people who they've always dreamed of having being the head of a company that has 50 employees, and that's their dream, right? But I think a lot of people, maybe maybe people who start with just themselves, or even people in the situation you mentioned who kind of fell into entrepreneurship because their other options were limited, they may see it in a very different way, which is, I have to do it all myself. And so the notion of developing a team and moving to a big office and all that never enters their mind, not because it's not possible, but because that's not their vision. And I think sometimes they do themselves a disservice when they see that, when they take that perspective, because sure, it's okay to be realistic. You don't want to dream and go out and rent an office when you have no clients, okay? But you ought to dream, what could this become if I'm really successful, for two reasons. One, so you can plan for it, and then second, so you can stay motivated, right? Because if you think to yourself, oh my gosh, if I get this client, then I'll be able to bring on a VA, or then I'll be able to bring on a product manager. You're a lot more motivated than if you look at it and you say, oh, if I get this client, I got to work twice as hard.
Right. And that's really good. I think that's an important point that you really brought up, because a lot of people do think they just have to do it themselves the whole time. And once they do start growing, it's hard to let go of some of those tasks, especially if someone has sort of an A-type personality and wants to do it all themselves and nobody else can do it as good as them. I see you raising your hand. So, okay, so you're saying you have that kind of personality a little bit. What are some of the tips that or reminders that you give to yourself that, don't be this way because you'll end up getting bit in the ass in the end? Source some of this stuff out. It's okay. You're not going to go under.
Right. Well, I think, like everything else I say, I think there's two pieces to the puzzle. One is how you feel about yourself, right? So you have to develop a mindset that lets you make mistakes, right? You have to say to yourself, what I'm here to do is not to be perfect. What I'm here to do is grow my business the best way I know how, and I know that along the way I'm going to make mistakes, but instead of letting them defeat me, I'm going to take as much information as I can from that mistake, and I'm going to use it to do something better, right? So first, getting your head straight, I think, is important. And I think for a lot of people who have the kind of the entrepreneurial drive and who have this passion, that's a hard step. I know it's hard for me, because I'm like, oh, but what if they don't like it? But what if I don't get that client? Or what if this product doesn't take off the way I thought it would? And you really have to do some work on yourself and just learn to take a step back and say, all we're doing is gathering data. That's my mantra. All we're doing is gathering data at this point. We're not drawing conclusions. We're just gathering data. And so, you try to see everything that happens in the light of, I'm just getting information. It's not a judgment on me. I'm just getting the information in so I can make a decision. So I don't know. Does that That's point number one. Does that make sense?
Yeah, yeah, it does.
Okay. And so then I think the second point is that you need to really have a plan. Like I said, you need to see this kind of longer vision. In 5 years, if I could dream, what would I want my company to be? And you kind of need to see those spots where you have a weakness or you just don't like it. For example, I work in finance, but I really don't like accounting. So one of the first things that I'm going to do when I get to a certain level of revenue is I'm going to hire a bookkeeper so I can get rid of that stuff because I just don't like it. And so if you set yourself a plan so that what you can do, instead of feeling like, oh, someone's taking this from me, you can be like, oh, thank God I can get rid of this.
Right.
Again, it kind of helps you stay motivated because you're like, man, I really want to get that next client because once I get that next client, I can get rid of the accounting, or I can get rid of the scheduling, or I can get rid of the social media. I know there are plenty of people who know they need social media but really don't want to do it themselves.
Okay. Wow. So many interesting points. First of all, let me say to the audience, if you have any questions, you can also use the Q&A app. I'm going to check that at about 9:30 and see if we have any questions for Stephanie. Second, I want to say you love finance, but you hate accounting. And a lot of us are going to be out there thinking, well, what else is there to finance but accounting? So that's interesting. I want to expand on that a little bit. And then after that, in the second half hour, what I'd like to get into is you mentioned a system and a plan to figure out what your finances are going to be. And I want to start talking about that. And that kind of leads up to your website, finance-ability.com, because you actually put together a system for helping people do that kind of planning and figuring out what they need. So let's go ahead and start with, what do you mean you hate accounting and you love finance? So what else is there? What parts of finance do you love? I guess the planning and the strategy behind it and the preparation.
Right. Well, let's be clear. Accounting is the mechanical aspects of taking each transaction, entering them into your accounting system, generating the reports, which are the profit and loss statement. Profit and loss statement just tells you how much money you made or lost over a period. The cash flow statement tells you where you spent the cash you had that period. And then the balance sheet. And the balance sheet tells you how you increased or decreased the value of your investment in your company over a period. Okay, so there's 3 financial statements that are all generated from the data entry of every single transaction in your business. So, you go to the bank and you pay a bill, that generates a transaction in the accounting system, okay? That piece, that physical piece of doing the accounting is the piece that I really just don't like, okay? And there are people out there who really enjoy it because it's very nice to see things all add up, right? It's nice to say, oh, look, it all matches up and I got the right balance. So it's not that it's a bad thing, it's just I personally don't like it. What I enjoy is taking the information from the financial statements and looking at what the business is really trying to do and saying, okay, to me it's kind of like being a detective. I've got this information over here and I'm trying to get here. And so I need to find a map, knowing that this is my starting point, how can I get from here to there? And what are the elements I have to play with based on the financial statements that are going to help me see the right way to go forward. So there's that piece, and then there's the piece, obviously, of helping people get external funding. Now, not everybody wants it, which is 100% cool, but there are ways to finance your business even if you don't want to take on a partner, either a bank or an investor. There are still ways of financing your business that a lot of business owners haven't considered. And so part of what I try to do with Financiability and even in my consulting practice is to open people's eyes to all the options that they have for getting money into their business so that they can grow.
That's great. In fact, I think that my guest that I'm going to have on the next show, who has a farm, and in learning about her business, she uses a lot of high school and college students to do some of the things for her business, like website, which she can't stand doing. She gets college students to do the website. And she says they don't last long because, you know, it's just for them a place to start out. She doesn't pay much, but it keeps her expenses down. She has a killer website because they're all like, oh, really into it. And then they have a really nice portfolio piece to show the companies that they really want to work for. And she's had some of those students get hired by companies like Microsoft because they had such a good portfolio piece from her website. So I thought that was really interesting, and that will be on my next show. But thanks for sharing all that. I'm learning so much today already just from the first half, and so much of it that relates to what I do as a solopreneur. I'm so glad that you came on. And I'm actually going to make some changes to some of the things I do based on just what you've spoken about so far. It's not quite 9:30, but I'm going to go ahead and check the Q&A, see if we have any questions out there. And, oh, hi, Lisa. Lisa Boncino. Hi, Lisa. She says, hi, Melanie and Stephanie. I'm wondering what Stephanie thinks about acquiring a business partner, the pros and cons.
Ah, okay. So this is a good question. And it kind of, excuse me, it kind of leads us into the discussion you were mentioning we wanted to have in the second half hour, which is having a plan, right? Because I think that a big part of deciding to take on a partner is knowing what you want. Okay, so for example, if you want to take on a partner, you need to be pretty clear on what you're willing to do and what you're not willing to do in your business and with your partner. Because one of the biggest places that I see partnerships fall apart is that people get along and they both think that they have the same goal, but then when some big inflection point happens, like it's time to get a big client in a direction that isn't 100% clear that it's going to lead to further business, one of them is like, oh yeah, we should do that right away, and the other one's like, whoa, wait a minute. That's not our main business. We're not sure about that. And so it's only in the details that they discover that they didn't actually have the same goals. And that sometimes can be a pretty difficult situation because at that point, especially if one of them has invested money and or a lot of their time, it's going to be very hard to come to an agreement about what to do. You know, everybody kind of says that taking on a business partner is like getting married, and I think it's true to a certain extent, although sometimes it can be more painful if things don't work out than a bad marriage. So what I would say is first understand yourself, and then understand your strengths and weaknesses as well. So understand your goals, understand your strengths and weaknesses, because what you don't want to do is you don't want to partner with somebody who has the same strengths and same weaknesses as you. You want to partner with somebody who's going to be complementary, who's going to bring you a different perspective, because that's what's really going to add value for you. Someone who's going to look at you and see things exactly the same way is just like a clone of you. So that's not going to be super useful in getting you to see the other side of the story. Mm-hmm. So that part I think is important too. You know, seeing where you're strong, seeing where you're weak, and then I think the third thing is obviously having a very good understanding of what you both contribute, so that when you talk about how you're going to split the value that you're building, everybody feels like it's equitable. You know, it's the whole, well, we went 50-50 because there were two of us, but I'm doing 90% of the work and he's doing 10%, and now I hate him and he's just a freeloader. You know, that doesn't create a great partnership. So I don't know, those three things seem to be the most important.
I think that's really interesting, that what you said about having someone who is not really like you and doesn't agree with everything you said, because I think most of us kind of just automatically go towards someone who does agree with us and we kind of are under the misconception, I guess I'm learning, that having someone who agrees with us and thinks the same way we do would be a good business partner, because then we won't clash. But you bring up a really good point about then you're going to have the same weaknesses and nobody's strength to overcome it. That's really good. Wow. Okay.
Well, and one thing, again, I'm not saying that you need somebody who's in your face all the time and that you can't stand to be around.
Right, right.
You want your personalities to be compatible, but you need to kind of objectively look at yourself. For example, I have some people that I work with who are they have these amazing ideas, right? But execution is not necessarily their strong point. And so in those partnerships, the role that I play is occasionally, okay, I really love that idea, but it's the fourth one. And so which one are we going to work on? Right?
Right.
Sometimes you need somebody who can balance out your strength with their strength.
Right. Reminds me of an old Monty Python skit where they had the guy sitting in a panel. One guy only said the beginnings of a sentence, the other guy only said the middle, and the other guy said only the end. But when they got together, they had a lot to say that made sense.
Right. But it is a lot like that, and I think that brings another important point to the question of partnership, which is you're not going to find a partner in the first discussion. Like, you may really click and you may be so excited because you're like, oh, this would be so great if I can take this person on, I can offload all this stuff. Wait. Take a deep breath, meet with them a second time, because everybody's enthusiastic when you meet with them at the beginning, but
Right.
sometimes you only see the downsides when you get off by yourself and you're able to say, yeah, but what about this, this, and this? So give it some time, I think, is another important thing, because sometimes as a solopreneur, we're so overwhelmed. If we see somebody and we're like, oh, they want to help me? Oh my God, and they want to help me right now? Yes, yes, come on. I'll give you whatever you want. Just come help me. Try to have a plan so that you don't feel that pressure to just kind of take the first offer that comes along because you're so overwhelmed.
That's really good advice, and I actually have a little personal story, and I promise to keep it short. But I'm working with two other solopreneurs on a project that we are collaborating on. One of them is a VA, Janice Hurlbert, Busy Business VA, and the other one is a webmistress, Cindy Fleming Alton, and they're wonderful. But during the course of putting together this team, we went through, I found Janice, and Janice has been wonderful since the beginning, and then the web part of the team, we've gone through like several. And because they come in, and like you said, they were real gung-ho at the beginning, but they wanted it to happen right now. And I'm very much, no, no, no. I want to wait till it's right. I want to wait till we have all the kinks worked out. I want to get all the planning. I'm big on the planning because that's what I do, strategy and planning. And so, over the course of meetings and meetings and meetings, they would just drop out, or we'd just never hear from them. We'd never even get I'm not coming to the meeting today. So when we finally found the one who stuck with it and did show up, that was a really, in addition to being very complimentary personality-wise, but also still showing up, even though there's no return as of yet. That was huge. And that was, like you said, they're all gung-ho in the beginning sometimes and don't stick with it. So that's really good advice I can attest to. Okay.
Well,
go ahead.
I was just going to say the other, while we're talking about partners, I think the other aspect of partnership that can be helpful for business owners is to not restrict partnership to ownership, right? Like you mentioned, you're partnering with these other two ladies for a project, maybe. Doesn't mean they're necessarily going to be partial owners of your business. And I think if you take the approach that you want to be partners with everyone in your business, so you want to be partners with your client, you want to be partners with your vendors, you want to be partners with your employees when you finally have them, and then of course you may want to be financial partners with a bank or a venture capitalist. But if you really start to look at everything that happens as a partnership, that is going to help you train your brain to be looking for the right stuff, so that when you go into the situation, like we talked about, you're not going to rush into a decision, and you're not going to get yourself into situations where all of a sudden you're like, oh, why did I say I would do that? Oh, that doesn't make any sense for me. So it helps you get this get the perspective you need to make good decisions for your business. Because just like there may be partners on the sharing the work side who aren't right for you, there may be partners on the client side who aren't right for you either.
Right.
Right? There may be partners, clients, who you just need to run away from because either you can't help them or they're not gonna be able to respect the boundaries you need to create around what it is you're capable of doing.
Right.
You know, if somebody comes to me and asks me for legal advice, I'm going to tell them what I know, but I'm going to tell them I am not a lawyer. You cannot rely on what I'm telling you as legal advice. You need to talk to, someone I can refer you to. And if they don't want to do that, at a certain point I have to recognize, I'm sorry, but I can't help you.
Right.
Right? I can't give you legal advice. I'm not a lawyer. So, that the whole notion of partnership, I think we might want to broaden it and really see how it can help us interact with everyone in our business.
Let's get on to that system we were talking about. And you actually call your system FinanceAbility. You have your website there at the bottom of your screen, finance-ability.com. Tell us a little bit about that and what you strive to do for the people that come to that website.
Well, the goal of the Financiability framework is really to help business owners know your worth. That's my tagline. Because I think particularly in a situation where it involves finance, as we mentioned at the beginning, people are afraid. And so they already start out thinking, I'm not sure I know about this. I'm not sure that I have any experience and or expertise worth contributing to this discussion. When in fact, you as a business owner are the person who holds the value, right? I mean, ultimately, if a bank decides to make a loan, it's a loan based on the value of your business. If an equity partner decides to invest, it's based on the value of your business, right? And so the idea behind Financiability was really to give business owners back their confidence and to help them understand that they did have something of value, but to help them find where their value is through the Financiability framework. So essentially what Financiability is it's your ability to attract investment, your ability to get people interested in your company. And there's really two ways to do that. Either you can increase the rewards, and a lot of times that has to do with sales, or you can decrease the risks, and a lot of times that has to do with expenses, right? So on the Financiability website, what you can do is you can take a quick 25 multiple choice question assessment that's going to help you understand where you are today, so what your strengths and weaknesses are. It's going to tell you where you're probably going to be most successful in looking for funding in the next 12 to 18 months. And then it's going to suggest to you ways that you can improve the value of your business by each individual ability that you have. So that's a lot of information in a very short period, but ultimately the goal is to help you get comfortable and confident in the value your business provides, so that when you're talking to any partner, be it a client, a potential employee, or a bank or a potential investor, you're not sitting there thinking, I have nothing of value to provide here. You understand the value that you offer, which always makes you a better it puts you in a better position, and it also makes you a better negotiator, because the more you're confident about what you have to offer, the less you're willing to take something just because someone makes you an offer. Does that make sense?
Yeah, it does. And while you were talking, I was actually sharing my screen and showing the audience the tool that's on your website, the financial assessment tool. And it's very, very easy to use. You said it was short, only 25 questions, so it's multiple choice, pick one and go to the next question. That's pretty nifty. I like that you came up with that, and I want to ask you, how did you come up with that? Is that just years of experience? You found yourself asking your clients these questions over and over again, and what kind of planning went into this on your part?
Yeah, well, Financiability has been a long time in the making, that's for sure. And yeah, it's part of it is the result of, all of my transaction experience and I worked for 10 years for a startup where we went from death's door probably 5 times to eventually being sold. And so, through that experience, I was like, there are some common elements of value that any partner is going to recognize, and can I quantify those? What are the pieces of value that exist in any given business? And as I tried to quantify those, that's where I came up with this notion of abilities, right? Because ultimately these qualities that we want to measure are things that belong in the business. They're characteristics of the business, and ultimately characteristics of the owner, right, when we're talking about a small business. And so then I said to myself, well, wait a minute, wouldn't it be cool if there was a way to measure that? Because what happens now, if you go and talk to a venture capitalist, for example, they want to see a lot of documentation, they're going to want to talk to you, and they're going to make a subjective assessment of these abilities, but you don't actually know how they're kind of judging you. You don't actually know where your weaknesses are when you get in front of them. And the same thing for a bank. A lot of times you'll go into the bank and they'll give you, hey, you got to bring me this list of papers, and then it kind of goes into a black hole and they come back with an answer, yes or no, but you don't really understand what happened. So the logic behind the assessment was to help you know beforehand. So before you walk into the bank, or before you create, before you spend 3 months creating an information memorandum and all kinds of documents to give to an investor, is this even a good fit for me? Is it something, first off, that's going to make sense for where I am, but then is it something that I want to do? So there's really two goals. The goal is to help you see where you are, but then also to help you understand what your options are so that you can pick the right one for you.
Wow.
Yeah,
That's
I mean, a lot of
powerful.
people, oh, thank you. But I think a lot of people, for example, don't understand that when we talk a lot about venture capital, everybody's out there, venture capital, oh, it's so great, and so just got a 20 million, Series B round. And when you look at the press, everybody's like, oh, that must mean they're going to be hugely successful. That company, can write their own checks and everything's going to work great for them. The truth is, 1 out of 10 venture capital funded companies is actually a success. It actually makes money. The
Wow.
other 9 either break even or lose money. Okay, so venture capital, while it gets a lot of press, is not a very high probability, nor is it a guarantee of success.
So what is the attraction to the venture capitalists who are funding it?
Well, the attraction to the venture capitalist is that they have a ton of opportunities, right? Lots of people want venture funding, and so they're able to see a very broad range of opportunities and pick and choose those opportunities. And the way that their model works is that they work on a very high risk, high reward model. So they're willing to take the risk that 9 companies don't necessarily make money for them, because they know that one of those 10 is going to be a home run.
Oh, right on.
And that's how they make money. Whereas a bank, their model is, I don't want to make a lot of money, but everybody has to pay me back.
Right.
So their model is very different. They are very risk averse, but as a result, they don't make much money on each individual loan. That's why it's much easier for them to say no, because they, at the slightest hint of risk, are like, oh, no, I might lose money. It's no for me.
Okay. Now, the other term I keep seeing thrown around a lot lately is bootstrapping. Tell us a little bit about what bootstrapping is compared to what you were just telling us about with the banks and the venture capitalists.
So essentially, what I see in the universe of funding options are 3 options. We talked about the betting, which is what I call getting money from a venture capitalist, because it's kind of like going to Vegas. We talked about the borrowing, which is when the bank lends you money. And so let's talk about the bootstrapping. Bootstrapping, I think, is a term that kind of gets misused, because some people think, oh, bootstrapping, that means, I have to eat Spam and live on bread and water for the next 6 months. You're not in the Army just because you're bootstrapping. Bootstrapping just means finding other sources of funding for your company without going to the bank for a loan or taking on a venture capital or equity partner. And the idea for me at least, is to expose business owners to a lot of the ways that they may not be aware of that you can bootstrap a company. So bootstrapping doesn't just mean, well, I have to stop spending and I have to pound the pavement and get more clients, right? There are ways that you can reduce expenses. There are also ways that you can add some products. For example, some of the repurposing that we've talked about, you know, Melanie, we were talking about that in the green room. The fact that you can be more efficient in the way that you do your marketing by taking one piece of content and using it in several places so that it draws more people, you know, that is an example of bootstrapping. Because what it means is for the same hour of your time, instead of creating one blog post, you've actually created 3 different marketing materials, right? So bootstrapping really covers doing it yourself, if you will, but it doesn't only mean cutting back on expenses. You know, and we can go into more, you know, if you want, I'm happy to tell you more tips, but does that make sense?
Yeah, yeah, totally makes sense. And I'm going to ask you about one other thing that you hear a lot about, and that's crowdfunding. Where does that fall? Is that in the betting, the borrowing, the the bootstrapping? Where does the crowdfunding fall?
Right. I think that crowdfunding is definitely a bootstrapping activity, because although a crowdfunding platform gives you a place to put your campaign, you still have to do all the work, right? You're the one who has to develop your proposal. You're the one who has to create a video and/or other marketing materials to attract people to your campaign. And you're the one who has to be out there kind of pounding the pavement, metaphorically, because it happens on social media, but, you know, getting people interested in your particular project so that they contribute. The other thing to keep in mind about crowdfunding is that it's not over when the campaign is over, particularly if you're working on a prize-based type platform. A lot of times most of the work comes after the campaign is over. So once you get the money but you actually have to send out the prizes, that's when there's a ton of work and some expense that you need to take into account when you think about doing crowdfunding.
You mean there's prizes?
Well, it depends. It depends on the type of campaign you run. But a lot of campaigns, for example, for a book launch, I have a really dear friend, Gail Harris, who actually raised some money on Kickstarter, I think, for her book, right? A book that she wrote with Brandy Raria. It's called Finding Zoe. Actually, it's coming out in October. It's really good. I think you'd like it. But what they did is the startup part, you know, the funding itself, they reached out to friends and family, but that, she told me, was relatively painless. But what happened is once the book was actually produced, she had promised, you know, signed copies for people who gave above a certain level. She'd promised other prizes for people who gave this level of money. And so she had to go through and, like, mail all that out. She had to get the books together. She had to get them all signed. You know, she had, to me, it sounded like more work after the campaign than before.
Right, but that could also be considered continuous marketing, because then somebody's going to get the book in there. It's signed. When you get something signed by the author, you're always like fangirly about it. Ooh, that's
right.
Yeah. So.
And that's one of the things that, you know, it kind of comes back to the notion of partnership. If what you're doing, if the method you choose for getting money into your business is creating raving fans, then that's efficient, right? Because you're doing 2 things at once. You're getting money and you're getting people who love your business and your project, you know, in this case. And so that's a smart move, but you just need to plan for it, right? You don't need to say to yourself, oh, okay, well, once the money comes in, I'm all done and I don't have anything else to do, because then you're going to be heavily disappointed when you realize, oh my gosh, you know, I got another 5 days of work to do to handle all of this.
Wow. Well, believe it or not, we're already at 9:50 a.m., 10 minutes left to go. I know.
Sorry, so, I've been babbling on. You got to shut me down when it's time to be
No. It's not been babbling at all. It's been all good stuff. But this is the point where I do want to ask for you to, you know, this is the last opportunity to get out anything that you wanted to make sure that you got it out. And also, if you have any upcoming events, you have a Hangout show, tell us about any of your stuff where people can go to find out more information to connect with you. And again, any last bullet point summaries or pieces of advice that you want to give?
Okay, well, first off, I just want to tell you how much I appreciate being a part of the show again, and thank you for asking all these great questions, because as we've been talking, I'm like, oh, you know what? That would be a great post, or that would be a great course. So hopefully, I'll be able to give even more information that people need. But where I am now is I would really encourage anyone who's considering either starting a business or who's starting a business and looking for funding to take the Financiability assessment at finance-ability.com. Click on the big purple button that says take the test. And 25 multiple choice questions. You'll get an answer right away. Once you enter your email, you'll actually get a personalized dashboard that's going to give you resources and suggestions for the specific strengths and weaknesses that you have. So, I would love to help you in any way I can. I offer individual consulting, and in October, they're not up yet, but in October, I will be offering small group classes on a Google Hangout. It's going to be limited to 6 people. But if you're interested in some of the specific topics that we'll be talking about, there will be a course on bootstrapping. There will be a course on how to budget. There will be a course on how to understand your financial statements. And there will also be a course on getting inside the brains of an investor. So if you're wanting to understand any of those, be sure to check out those courses on the website.
Wow, that sounds awesome. Congratulations. It's so exciting. Are you nervous? Because it's almost October now.
Yeah, well, yeah, and to be honest with you, and this is where it's funny to be an entrepreneur and to be giving advice to entrepreneurs. I said that right now because those courses aren't up yet, and so now that I've said it on air, I have to actually go put them up on my website.
Yes, that's one of the tips and tricks we say. Make it public, because then once you put it out there, you have to do self-motivation by making it public. Let me ask you this. What other social sites are you on? Which ones do you like the most? And which ones do you find are bringing you the most returns or giving you the most engagement or seem to find the most interested people?
Well, I started on Google+, and I started in November of last year. So Google+ obviously is kind of my home base because I've been here the longest, and I really enjoy the way things work here. It's not this kind of hit and run. I don't know. It's just very different. And I had always sworn I would never do social media. My parents, my God, my parents were on Facebook, and I'm still not. So that tells you how I feel about most social media sites. But I really love Google+, and I really think that it's a way to build relationships. We talked about partnerships, but I really think it's a good place to do that. I think that Twitter is another place where I am currently active is kind of a big word, but I'm there. I try to drop by from time to time and meet people. It's a little harder to meet people there, I find, but it's not impossible. And I think that it's also a question of where the people you want to do business with and where the people you'd like to meet find themselves being the most comfortable. So there are people I know who are on Twitter who I'd really like to get to know, and so I'm over there trying to meet them. I don't do any other social media, mainly because, as we talked about, I'm by myself, and at this point I'm more focused on developing the site and the courses. But I hope as the business grows that I'm gonna be present on more social media sites and be able to meet even more people.
Awesome. Well, thank you so much, Stephanie, for sharing your time with us this morning. And wow, so much great advice. You had so many good takeaways. I especially enjoyed the conversation about the different types of financing out there, where you spoke about the betting, which is the venture capitalism, like going to Vegas, the borrowing, which is the banks, and the bootstrapping, which also includes crowdsourcing. I really enjoyed the discussion that you gave us about forming partnerships and some of the things that you want to look for in partners and some of the things you want to look out for when forming partnerships. That was really useful advice. Actually, I don't even know where to start because it was all useful advice. Everything you said was great. Thank you so much for coming on today. I really enjoyed it.
Well, thank you. Thank you so much for having me, and it was a pleasure to be here. And obviously, if anybody's got questions, feel free to put them in the comments, and I'll get back to them and do everything I can to get you an answer. And we've said all this. The real message I always want to convey to entrepreneurs is, I believe in you, and please don't be afraid of finance because it can actually help you, but you need to get educated about it, right? I'm sure you would say this too, Melanie, about marketing is it can be an amazing tool, but you got to know how to use it right.
Right.
So, just don't be afraid to take the first step and say, hey, I'm not sure, can you help me? Because there's people like us who are out there to help you, but you got to let us know you need help.
Yeah, and it's interesting you say that, because as you were telling us about so much today, a lot of the time I was thinking, wow, it's really the same concepts that are applied to marketing but being applied to finances, and very, very similar in the approach. So it just makes a lot of sense. It's good strategy. Yay! Please come back and join the TGIF Business Networking Hangout again on the 19th. It's broadcast the first and third Friday every month. So the next show is going to be on Friday, September 19th at 9 a.m. Pacific. My guest will be Linda Fritz, owner of Sun Sugar Farms, where they grow edamame and tomatoes. But interestingly, she also invented something called a Cresby crate, C-R-E-S-B-I crate. And it's basically just a plastic, crate, but that people use to go grocery shopping. It folds up. It's a folding system, so it's very slim when folded. It has a shoulder strap. And it's an alternative to reusable bags that has, well, you'll hear about all the advantages that it has over the reusable bags, like being dishwasher safe and, stacking your stuff so it's not going to fall over and fall out of the bags in your grocery carts. And what I found was so interesting about her company is that she's been on some of those, those shows where you go on and here's my invention and they vote on which one's the best one, and she's actually won a couple of those. So she does also a lot of cost cutting. Like I mentioned a little bit earlier, some of the things that she does is use high school students and college students to do some of the work that's required around her farm and on her website and her promotions and video marketing. And she's partnered with different people and organizations to make the various pieces of her products that go together. So she supports other small businesses, and it's just a really interesting story all the way around. We're going to learn how she came up with her idea, how she marketed it, how she got it from idea to product and manufacturing, and where she's going from here. And I think that she'd probably be a really good person to put in touch with you.
Yeah, it's funny that you say that, because as I was listening, I was like, oh my God, that sounds so cool. I need to talk to this woman.
I was thinking that. I was like, wow. So, well, if you're available 2 weeks from today, please come on in and join us. Come inside the Hangout. You're always welcome to come in anytime.
Oh, excellent. Thanks.
TGIF is newbie friendly, so if you want to come in, practice being on a Hangout, being on camera, practice giving your 30-second elevator speech. Everybody gets a chance to give themselves a little bit promotion and to introduce themselves. So if you ever want to come in, just send me a message and let me know, and I'll add you to my invite circles. Have a great day, everybody. Thanks again to our special guest, Stephanie Sims. Say bye-bye.